What is up, guys? Welcome back to my channel. GGFOREX here, and on today's video I'm just going to do a breakdown of one of my trades today. Now, it was on cable, so that is GU, pound dollar, for anyone who didn't know what GU or cable was. So British pound against the US dollar, and madness happened today. I thought I missed out on the trade in the morning, so I cancelled my pending order just because it already took out my target. And then I noticed something else happening. I was like, okay, maybe this is not a sell, this is now taking out the lows and it's gaining strength. So what I'm going to do in this video is explain to you my thought process, what I gained out of it, the mistake I made afterwards, and then what I could have got. Because we could have made mad skills, insane, and I would have got more if I wasn't at work, which is really annoying. But I am sticking to my rules of one trade per day. Yeah, basically, one trade a day, and this trade wasn't made on smart charts. This was done on my C-Trader account purely because I wasn't prepared to take the risk on a smart charts account, because as you know, it is 3% for the month, and then I got my funded account, okay? So I'm really waiting for those perfect setups on a higher time frame just to play it safer. This was on a 3-minute time frame. We're talking pew entries. We're talking legit sniper entries, not like the ones you see on other YouTube channels. We're talking actual bang, quick scope headshots, fucking 100-point entries on this, okay? So what I'm gonna do, I'm gonna go onto the charts, break it down what I did, what I was thinking, and why I bailed out early. And if I stayed in and stuck to the original plan, ooh, 1 to 18s, 1 to 6s, but I came out at 1 to 3.5. I know, right? But I got 7.5% out today, so I am happy with that. But I could have got so much more. But this also means my analysis is getting better. I'm getting some better at entering trades. I'm being more patient. I'm waiting for confirmations. I'm waiting for proof. Yeah, let's get it. Guys, hope you can see me in the corner. Hope you can see my screen. Right, as you can see, we are on GU. Now, let me take you back. Why did I even enter this trade in the first place? What was I looking for? What did I miss out on? Well, here we go. We're about to do some damage. So, if I go back to the 15-minute chart, this is what I've missed out on before. I tried to get in here, okay? I think I was going off the 5-minute candle. I was doing things, man. I was doing all kinds of things. This is kind of the problem as well, guys. If you go on from a high time frame and you go down and down and down into the lower time frames, the likelihood of you actually getting wicked in the first time is a lot slimmer, purely because you're going tighter and tighter and tighter, which is great because you get amazing reward to risk. But you are going to miss out on some opportunities. So, my original trade, I'm doing this on TradingView, by the way, just because I can show you these markups. So let's, what one is it? Is it that one? Is it long? Yes, I was going for this the first time. This is my original markup. I think it was on Monday. I missed out, I was fuming, I was going for that. It would have been lovely, 8%. And then what happened? It went up, showed me all the right information I was looking for. It reacted off my logical area, which, if you don't know, if I can get that to go, this was my logical area I was looking for. If I know how to do this, it's always a problem. It's always a goddamn problem. This is my point of interest area. It hit it. It broke the highs, it flagged down, it had all the right signs. I looked at my bankers candle, my 5-minute one that was unmitigated. It came down and then just went bang. I was like, oh, I literally missed my entry by a pip. Like 1 pip. I was like, God damn it. Okay, so I was like, all right, we're moving on. We can do this, right? So we're going back. And then it made double tops. And then it came down again, making, well, this I thought was liquidity until I looked closer, right? And I zoomed in. If you have a look, see that bar was there, that bar was there. This bar just came down past it, taken out everyone's stop loss down in this area. So I was like, oh, and it was mitigating that candle there. That was never mitigated. And I was like, ah, okay. Right, now we're getting a bigger picture. Now we understand what's going on. So I was back looking for buys. And then this happened, okay? I was expecting price to then come down a little bit further and then mitigate me back in. As you can see, price got close again, a little bit lower than this, and never came down. I thought, right, this is 2 times in a row now. I've missed a beautiful buy, okay? A beautiful one. Because as you've seen, the reward to risk would be madness, absolute henchness. It would have been insane, okay? If I went just to these lows, I mean, oh, it would have been over. If I just said, hey, I think it's going to touch these lows again, and just winged it, oh my god, guys. I mean, I would have targeted these up here. Actually, no, probably this banker's candle there. I mean, that would have been, what would that have been? That would have been a 6% gain. I mean, if I zoomed out to get a bigger picture, is there any more equal high? Oh, well, there you go. I would have targeted there. I already had it marked up. Look at that. That would have been a beautiful 11, no, 1 to 8, call that a 6. That would have been a 12% gain to the account right there. Smash. Absolutely rogered it one. I was like, okay, it's taking out my targets and now it's coming down. And I was like, god damn it. Like, okay, I missed out these 2 beautiful buys. Okay? Normally I would say walk away. This isn't revenge trading. Remember guys, I'm not just putting random pending orders in. I am setting points of interest, and then when price gets in that area, I am looking for proof for reversal. This is what's keeping me out of trouble now, okay? Because there's been many times when I thought, oh, that's a good entry. Before I would have put a pending order on, and it would have either worked or didn't. I didn't really mind because I was only losing 2% and potentially gaining 6 to 10% on any trade. So my reward to risk was making me better, but as I want to do the FTMO challenge, I kind of want to be more consistent. Hence why I'm doing it this way instead. But whilst I work a 9 till 5, I can't see the charts 24/7, so I'm missing out on these amazing little entries. Because if I don't get it the first time, the likelihood of me getting it the second time and third time is like way up there. So let me just break this trade down for you and my original thought process. Now I was seeing this around lunch at work. Okay, and if this was my FTMO account, let's turn the heating off. If this was my FTMO account, right guys, oh my days, I would have made 3 months wages in literally an hour. Sorry, 2 months wages in literally an hour, okay? This is the power of Forex right now, okay? So, it came down. This was the candle, my point of interest. This is what wiped out even more liquidity down below. Still didn't get low enough for me to be completely confident that price wasn't going to go lower. I was still suspicious, but again, from what I previously seen in the last day or two, today's Tuesday, our market's only been open from Sunday night, so I have been watching this quite a bit. So this was the candle that I was interested in. This flagged down and then bang, okay? Broke structure, then started flagging down into this candle. I was like, right, from what I've seen behavior-wise on this pair, I still think it's bullish. It's showing me bullish signs. Why? Because it broke this high. Now, I don't know how to do a drawing tool, brush. Because it broke this high, okay? Let's see if I can get it fatter. Can I get it fatter? Yeah, okay. I broke this high. And then I saw this last candle, which then took liquidity of this. And yes, you can take liquidity from a very low time frame, even a minute. If you have a look, equal lows, candle came down, took them out, and then broke structure. And I was like, hey, we're on to something here. Okay, so then I got in off this candle. I made it fatter because if you have a look, I think it was, maybe, hang on, let me go back. I think it may have been a 1 minute entry, possibly a 5. Let me double check. I'm trying to remember what the candle I entered on looked like, and it was wicky both sides, so it may have been a 5 minute entry. Well, we're talking snipes. Well, we're actual sniping. Yeah, it was a 5-minute entry. So it's from the top of the wick to the bottom of the wick. That's what I was going off, okay? Let's just zoom in. Top of the wick to the bottom of the wick. Makes sense, so do that to that. And my original target, my OG target was this, okay? It would have been a beautiful 1 to 6, leaving me with a tasty 12% for the day, which is my weekly target done. Finished for the week. Bob. Alright? That would have been really nice, and if I show you how long that would have taken, just to show you the lower time frames and the power, when you combine everything together with your confluences, you're looking at 2 hours. 2 hours worth of trading, and I would have made, if I had my $100,000 FTMO account, I would have made well, it would have been £5,500. No, it wouldn't. That would have been £12,000. So that would have been over half a year's salary in 2 hours. Think about that, okay? But I didn't get 1 to 6. Reason being, I saw this move, okay? Consolidation, bang, took out the highs. Okay, took out the highs, you have a look there. And then if I clone it, it took out the highs, took out the lows, and I was thinking, oh damn, this is where it's gonna make double tops, because it did make double tops. This trade was still bullish, okay? It's still bullish. There's liquidity up here, and again, we have fat amounts of imbalance right there. I mean, look at it. That's what I was originally targeting, and as you can see, it just henched through. But you know, hindsight trading is a horrible fucking thing. Okay, but it gets better. Let me just put this in. Okay, right, that's what I am looking at for IPAs in gold. So I entered here, price came up here, and I was like, yeah, this is good. And then it went bang, and I was like, oh, damn. Because if you have a look, the market, shockingly, is making nice targets down below as well. Okay? It's making nice targets down below. And I was like, okay, I'm not taking a risk. I moved my original TP back to this candle, thinking price was going to retrace and get out of their order block to then continue down and then smash these lows, and then potentially even more down here, purely because I was thinking, well, today we've had a massive drawdown. Like, price did a huge spike up as we've seen the day before, and then price just kept stepping down, taking out all of this money down here, all of it. And then this big spike down just smashed it, and you could say that's almost equal lows. I mean, it did break that liquidity down here in close inspection, but when I was at work, I was on my phone, I couldn't see the charts properly, which is the downside. So I was hesitant about even putting a buy into this trade. So that was still in the back of my mind. So I'm trying to give you the picture in your head of what I was thinking whilst placing this trade, and what I was seeing, and how I was gonna be risk-free. So when I saw this price spike up and then come down, take out these lows, and make targets down below, there's targets still above, so there was a risk. Okay, I then moved my take profit down to this candle, giving me a 3.5% gain, which is a 7.5%. It roughly worked out as 7.5% gain on my account. Okay, I think it's like 3.67 to 1. You know, so it's roughly 7.5%. And then, because I thought, oh, the bollocks, I know what I'm doing. Because it kind of met up with my rules, and again I was on my phone, so I didn't realise until it was too late that this created double equal highs up there, which meaning there's money up here, okay? So this was a risk for a sell, a high risk. I shouldn't have done a 2% trade on this, but I did. Remember, my rules were only one trade a day, I broke that, I paid the price. So learn from me, okay? I thought, I'm out of this trade anyway. I thought, if I think price is going to come down from here, I'm going to go back down to this candle of where I got in, because it's still unmitigated and it takes out these lows. Bagging myself another 1 to 4, which will be like a 13-14% gain on my account today. Okay, well, it wasn't, because price smashed through here, taking out liquidity, and carried on doing what I originally thought. Not only did it do that, it also hit my original target of 12% and a little bit more. Completely filled this imbalance. I mean, look at it. That would have been a 14, well, call that 15% trade. That is almost a 1 to 8. That has been just under 16% on one trade today in about 2.5-3 hours. And then somewhere in London, I'm guessing London, maybe New York, I think it's a New York session crossover, hence this volatility, someone went, you best close out these contracts because the dollar index is going down. And let me just show you the dollar index a sec. The dollar index has absolutely hooned it down, okay? Which means the dollar's weak, which means the pound's going up, which is another confluence I was using for that trade in the first place. And look at it, it came down, bang, full send to the top side, okay? Absolute full send. I don't know how many millions it cost to make this move in the market, but it cost a lot, okay? We're talking maybe at least 100 millis. Because remember, there's 5.3 trillion today. 5.3 trillion a day in this market, and to make a candle move like that, you need some shreddies, okay? That is a serious move in the market, but you could say it's market manipulation, blah, blah, blah. Obviously it was, but why? What was the reason for it? Now, you know I like my candles. There's a reason for this. They needed to close out contracts. Remember, candles don't move for no reason. They are people putting orders in, they're buying and selling contracts. Where was this going? To the OG spot that has been trying to go back to for so long, okay? But if you had the balls to hold this, I would have been looking at a decent 1 to 19. Yeah, a 38% gain. I hope that the maths do work out on that. 19 times 2. It's a 38%, okay, cool. 38% on my account in one trade, and it would have done it within a 4-hour window. I would have been done for the 4 months. No, I wouldn't. I'd have been done for a month, because my target is 10% a week, okay? So I would have been done for the month. I mean, that's it, I've finished now. I've done my 4 hours of trading for the month. Just have some margaritas and chill out, right? But I didn't do that. But where was this going? So let me just get this out and do a horizontal line, and let's do this, okay? This blue line. Let's go back out to the 4-hour window. 4-hour thingamajig. Okay, where is this going? What was the point of this huge spike? What did it do? It came right up and smacked this 4-hour candle here. It came up and it mitigated out of this candle because price, as you see that little gap there, price never came back to that area. Just didn't go anywhere near it. There's an unmitigated candle here. There would have been a lot of orders there in drawdown. The banks need to get their money back. They used the news today and they full send it and got out of their orders. That huge spike was on purpose. There was a reason for it. Okay, so let's go back down to the 3-minute chart, which is where we were. And if I wasn't at work, okay, how could I have caught this move? How can you guys catch this move? Well, just look at market structure. Okay, we've now come down, we have broken these highs. So we can say, hey, look, liquidity has been taken from this area. So you know the bias is bullish. Have we got targets? Well, yes, we do. You can even target these highs up here, these equal highs. We've got some cash sitting here. Look at that. You can definitely tell us some cash. You could buy a couple of Ferraris for that cash, right? So that could be our target up there. I mean, I don't think any of us would have had the balls to go up to here. I mean, that's just next level baller. But let's just see how we could have played this, right? It came down, it broken these highs. So what's the next logical step? Well, we got higher high, higher low, higher high, higher low, higher high that took out the liquidity here. Well, let's just go in on the next bankers candle, especially if it lines up with the fibs. Let's see the push for the high, came down. Where did price go back down into my kill zone, the 7.1 and the 7.18, or the 7.1 and the 7.8. So I would have put my, not that one, this one, long order in. I would have put my order in here. I would have played it safe, because remember, I like to have a little fatter stop loss on a lower time frame. Remember, we are on the 3-minute time frame. I guess we could go down to the 1 minute and be proper sneaky and have a closer look of what is actually going on. The price comes down to that candle. Yes, it did. Look at that, guys. Came down to that 1 minute candle right there. To the pip, last down candle. And what was our original target? What was our target up there? Let's have a look. What would we have got? We would have got a nice 10% on top. Okay, a clean 10% on top. And remember, this is 1 minute candles. So by the time it wicked us in, 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. 9 minutes, 10%. Last year FTMO challenge smashed in one trade. That would have been a beautiful day. Okay, this is why I'm annoyed. I gotta do a 9 to 5 because I'm missing insane opportunities like this. But I'm happy because I'm reading the charts better now. I'm not jumping in, I'm not getting FOMO, I'm reading market structure correctly, I'm waiting for proof to go towards my bias, and then I'm pulling the trigger. Okay? So that would have been a beautiful 10% in 9 minutes. And then life is good, innit? You had a $100,000 account, you just made 17.5 grand in a matter of 3 hours. 17.5 grand. FTMO think you're the bollocks. They'll double your account originally because you got 10%. I mean, life is good. Life is good. I was super happy with that, but as I was at my job, I didn't able to watch the charts closely enough to do that, but I wish I called in sick today, or I was furloughed, but I guess I wish I wasn't furloughed because that'd be a scary time. But yeah, you see what I mean? I'm missing out on opportunities because of my job, but I can now share my knowledge with you guys about what I missed out on. I know this video's got a bit mental, but everything happens in the market for a reason. They use the news to manipulate the market. Just see where they're going. There is a reason behind it. Follow the breadcrumbs, understand market structure, and look at that. Bang, bang, £17,500 if you were a $100,000 account. And then that payday, what will that payday bring you? If you just did that, okay, 3 hours for the month, you did those 2 trades. Admittedly, if you did my one to begin with, you would have had 22%, but you know, what is that? So percentage calculator, maths. So what is 70% of 17,500? You would have paid yourself £12,250 for 3 hours work, which is half my yearly income, more than half of my yearly income. Can you see that why I love this so much? And it's cost a lot of pain to get this knowledge and expense. So I hope you guys found this video valuable. Please give it a like. Well, don't have to do what you want. Give some hate if you want to say I'm full of crap. But that is what's happened today. I made 7.5 minus the 2. I'm 5.5% up on today. Hopefully tomorrow I can find some nice setups and actually execute them, because remember at time and price, that happened New York Open. My original trade was just before, maybe just after London Open. So yeah, things are kicking off, okay? I do like the New York Open. That is when things get spicy. So between half one to 3:30, you've got the European market shutting down. You still got the New York and the London Open kicking off. And that's when you see the big moves like that, which is an absolute beauty of a trade. So yes, these are legit sniper entries on the 1 minute. Not like you've been seeing everywhere else where they've got huge stop losses and they're getting 1-to-1s, 1-to-2s. That's not a sniper entry. That is a game changer. Like, share, subscribe. Love you all. Join the GGFOREX group down below because we have broken 200 members, 204 members. Love you all. Yeah, I'm gonna calm down now. I'm gonna play some card. That's what I'm gonna do. I'm gonna play some card and do a bit of Warzone. I'll see you later on, guys.